Dan Niles back with us, founder and portfolio manager at Niles Investment Management. All right, Dan, welcome back to the show. Thanks for being here.
My pleasure, Oliver.
Hey, first time we've spoken with the new gig. Tell me about what you're doing. Just kind of give me the rundown on your approach. Anything changed from the style that you used to run the Satori Fund?
No, it's just started my own firm on April 1st, and just I invest the same way. There's no difference from the last 20 years of doing my job.
All right, there we go. Congrats. Tell me about the plan here for the big tech trades, Dan, as you've been going back and forth between liking some, having preferences for others. Last time you told us that you're looking for Alphabet to firm up, catch up. Now I think you've got a pretty interesting approach to Apple, so I thought we'd start there. Tell me what you see when you look at Tim Cook and his AI connections right now.
Well, I think with Apple, there's the short term and there's the long term. On the short term basis, everyone desperately wants to believe that when Apple puts AI on their smartphones, that you're going to get this big upgrade cycle. And so reality really has nothing to do with stock prices in the short term. And so Apple has a June 10th Worldwide Developers Conference coming. And at that, they should talk about their AI strategy. And, you know, I'm sure 75% of your viewers have an iPhone sitting in their pocket. And so people they're not necessarily focused on valuations. They're not focused on fundamentals. They just go, oh, I have an iPhone. They're going to put AI on it. That's going to be really exciting. And Apple has a very strong tendency before big product launches for the stock to outperform in the month leading up to that. And then you get into the reality of, is it actually selling? And you can think of the Vision Pro as an example of that, where the stock went up about 9% in the month prior to that. Even though most rational people, I think, they look at the product and go, how well is a $3,500 thing going to sell? It still didn't stop the stock from going up 9% in a month before that. So with AI, it's real. You know, you've been talking about it, I'm sure, on your show constantly. That's going to end up on the iPhones at some point coming up. And so I think you're going to have a big move into that. But then it's going to be the rubber meets the road of they still are going to have the competition problems they're having in China with the resurgence of Huawei. The valuation in the high 20s is still very expensive for no growth, which you have seen at this company over the last 3 years, and subpar growth over the last 5 years, and at a high valuation. And so that's the longer term issue I have with Apple. But, you know, maybe I'm wrong. Maybe there is a big upgrade cycle, but in the near term, it doesn't matter because it's a name that I like, at least through that June 10th event.
Okay, so a little short term bid that you think is likely, kind of product specific and event specific catalyst, whereas I mean a long term kind of caution case, I mean it's shrinking. It has been for some time, so it certainly stands out in that negative way compared to its peers, right? I mean,
no, absolutely,
they're not growing anymore.
I mean, yeah, I mean, if you think about it, the last 1 year, the revenues are down 4%. The rest of the Magnificent Seven revenues are up 42%, including Apple. You look at it over 3 years, the revenues are up 1%, and the rest of the Mag 7 are up all of the Mag 7 are up 86. And if you say, well, that's still too short term, you say 5 years, they're up 56%. Over 5 years, the revenues from the March quarter from 5 years ago to today. The next worst is Microsoft up 102, and the average is 275. Even if you take NVIDIA out, the average is still 155, which is triple what Apple did over 5 years.
Wow.
So there's no way you can think of this stock over 1, 3, 5 years as a growth tech company. The best you can do is durables. It's a staple kind of thing. But do you want to give something a high 20 PE when the market's at 22 times? And quite honestly, you can buy growth tech stocks like a Meta, like a Google, you know, at much lower valuations that are growing, and you can buy, you know, growthy names at actually pretty reasonable valuations when you growth adjust them, like a Microsoft or an Amazon, where Amazon, you're going to get double the EPS growth over the next 2 years. So that's why there's the short term, which is all sentiment driven for any stock. And obviously you've talked about GameStop in your prior segment. And then there's the longer term, which is fundamentals, because GameStop might have gotten to whatever, 450 during the peak in 2021. And obviously it came down off of that, but it just takes some time. But in the short term, anything can happen and will happen in the stock market. And so Apple, I think, is a good short-term play on that.
All right. It sure seems like we are kind of opening the door for these big events to occur. If we do start seeing the kind of frothy meme trade translate into a new high for stocks, Dan, where do you think you can get bang for the buck? Is it still in the longer term tech trades that you like? Or if we come back to highs without some inflation scare that we were worried about last month, does that kind of put some of the riskier stuff back into play? What would be the way to trade basically a fresh breakout in the market?
I think it really comes down to individuals' risk tolerance, right? And how much risk are you willing to take for reward? For me, I'm pretty conservative. And so the stocks I typically mention that I like are ones with good cash flow, good profitability, good growth prospects, good durability, whether there's a recession or not. If you want to get aggressive, then you buy these so-called innovation stocks that did great in 2021 and that have come down 70% since then.
Yeah.
And so I think, or you buy a meme stock or, whatever speculative thing you have going on, because I always say there's no problem investing in a bubble. You just have to know you're in one and not delude yourself into thinking there's something more than that. Yeah. So for me, I like to think of things longer term and with some defensiveness built in. Right now, the market's ignoring all the bad news. It's ignoring PPI coming in hotter. It's ignoring all the higher than expected inflation prints. It's ignoring the fact that growth is maybe a little bit slower. And that can go on for who knows how long, but eventually fundamentals matter. And so for me, the stronger names, the NVIDIAs, where it's growing 100%, and you're buying it at a 40 PE, a Meta where you're buying it at a 23 PE for high teens revenue growth benefiting from AI. A Microsoft where clearly they've got an inside track with their relationship with ChatGPT and OpenAI. That's another interesting one. And so you look at all of those together, and that's where, if you're thinking more longer term, I think is interesting. And the names that have got competitive threats against them, like a Tesla, like a Google, that's where you need to be a little bit, and an Apple, that's where you need to be a little bit more circumspect. And Things can always change, but that's how I think about it.
Hey, Dan, just real quick to follow up on Alphabet, because last time you said that's the one you wanted to get excited about the most. Seems like you're still on the fence for that, for Alphabet.
Yeah, no, I think with that one, I think you're seeing it today where they're having their big AI event today. Stock's not doing much. I think you've heard, and we'll see what happens, that Apple is leaning towards OpenAI for their generative AI experience on their iPhones. We'll see if that happens. Maybe they will go back to Google. But I think it shows you there's some other competitors in there. And so I think you need to be careful with that. Now with Google, from a much shorter term perspective, regardless of whether we get a recession or inflation scares or any of that, we're getting a presidential election, we're getting the Olympics. And so much like that's a big thesis for me behind liking Meta, that'll help Google offset some of these other things that they're losing share in search in the short term because of the spending on the election and the Olympics. And then I think it's more of a next year where this stuff really starts to take hold, but you can watch the stock and the market share data that we get to get some ideas around that.
All right. Like the way you really pinpoint what each of these has going for them and what they don't, because they all really do have nuanced cases, but in some there are better ways to overlap the positives into one stock than having to, trade it off. So I like those details. Dan, thanks a lot. Always like talking the big tech trades with you. Appreciate you being here.
Thanks, Oliver, for the time.
Absolutely, Mr. Niles, founder and portfolio manager at Niles Investment Management.